Hey, what up, YouTube? It's your boy, the Stock Dude, back on the prowl again. Now, in this video, I got 3 bangers for you. Now, these 3 bangers are based solely and purely on nothing other than technical analysis. In other words, I'm a technical trader. I trade what I see, not what I hear. Now, I gotta be honest with you. These 3 stocks are a little bit on the risky side. 2 of them are. One of them is kind of solid, but the other 2 are a little bit on the risky side. But sometimes, hey, gotta take chances. Sometimes you just gotta roll the dice and see what happens. Sometimes it come up double sixes. Everybody happy with double sixes. But sometimes it come up snake eyes. Nobody don't want to see that. I don't want to see that. But sometimes it's a part of the game that you about to play. I'll be honest with you. I trade almost anything, as long as there's nothing immoral, dealing with alcohol, marijuana, playboy stuff. As long as it ain't nothing like that, I'll trade almost anything. I'll roll the dice just like that. But that's just me. That's the type of trader I am. But what about you? So if you don't mind rolling the dice, I got 3 bangers for you. And let's get right into it. Banger number 1, this is probably the most solid of the 3. Goes by the name of Hewlett Packard Enterprise Company. Oh yeah, that's the right one. That's the one you're thinking about. Everybody knows Hewlett Packard, but I'll read the description all the same. Hewlett Packard Enterprise Company provides solutions that allow customers to capture, analyze, and act upon data seamlessly. The company offers general purpose service for multi-workload computing and workload optimized servers, HPE, ProLiant Rack, and Tower servers, HPE Blade System, HPE Synergy, HPE ProLiant Storage Solutions, HPE, some of everything. But Hewlett Packard, in a manner of speaking, is a computer company. Now, like I always do, I go over this price. Number 1, Hewlett Packard Enterprise Company comes in at $16.42 per share. Now, before we get started looking at the chart, I gotta say my disclaimer. I'm not a stock expert, nor do I play one on YouTube. So please do your own due diligence and your own research before you put your hard-earned money at risk. And if you're new to this channel, please hit that subscribe button and turn on your notification bell. Let us go to the chart. Hewlett Packard's chart actually is excellent. As you can see, since November of 2020, it's been in an uptrend, going up to the line of resistance, this magenta line, and then slowly trickling back down to this cyan color line, light color line, light blue, to the support level. And it's been basically doing the same thing, going up, hitting support, coming down, catching resistance, ever since November of last year. Now, right now, it's April. So that's quite a while that this has been in an uptrend. But I'm going to tell you what I like more than anything. Look at the bottom of the screen. You know I do it. I always got to do it. Them 3 big green volume spikes. That right there is telling me something. It's telling me, let me just think about it for a couple of seconds. It's going up. It's telling me that it's going up, because on Friday we had 19 19,600,000 plus shares traded. On Friday, over 19.6 million shares traded. Average volume is almost 12 million. So on Friday, we had a substantial amount of shares traded beyond what's normal. So once again, Hewlett Packard is coming in at only $16.42 per share on heavy, I'll say it again, heavy trading volume. So take my word for it. Take it to the bank. If you're looking for something to put in your portfolio and to hold for at least 2 years, maybe even 3, check out Hewlett Packard Enterprise Company. Now, I told you that 2 of the 3 that I had, 2 of them are high risk, high reward. And like I said before, I trade almost anything. I ain't really scared of nothing, because all you gotta do is sell it if you don't like the way it's trading. So I ain't really scared to trade anything, but everybody ain't cut out like me. But I'm gonna give you the opportunity in a high risk, high reward play that goes by the name of WRAP Technologies Incorporated, ticker symbol WRAP. Used to be a radio station by the name WRAP. I went there to DJ back in the day. WRAP. Now, I don't know if I've seen a better ticker symbol than WRAP. WRAP Technologies Incorporated is coming in at only $5.85 per share. Now, I'm going to go and read a little bit about WRAP Technologies in this company profile. And by the way, I'm on Yahoo Finance, just in case you guys are wondering. It says that WRAP Technologies Incorporated, a public safety technology and services company, develops policing solutions to law enforcement and security personnel. The company develops Bolo Wrap 100, a handheld remote restraint device that discharges an 8-foot Bolo-style Kevlar tether to entangle a subject at a range of 10 to 25 feet. It operates in America, Europe, the Middle East, Africa, and Asia Pacific. The company was founded in 2016 and is headquartered in Tempe, Arizona. So this is a law enforcement stock. And I like that. They have a device that can entangle a subject at a range from 10 to 25 feet. Now let me think about that. I think I like that, because having a device that can entangle a subject from 10 to 25 feet, I think that's a lot better than shooting somebody in the back 9 times. Let me have the thing that'll entangle their feet. That way nobody had to get killed. Let us go to the chart. WRAP Technologies Incorporated. Almost make me want to go, oh man, into a freestyle flow. I can drop hot lines straight from the top of my mind. I'm the baddest one that you don't know about when I spit my rhyme. Let us get back to the chart. Now, this coming off of what's called a multiple bottom formation. Basically, a multiple bottom formation is where the price comes down to a low point, as it did right here in January, and then bounces, in other words, trades higher up to a higher point. Then it comes back down once again to that same area of support, another low point. That's the second bottom. Then it bounces off of that, trades higher, comes down yet again a third time in March to that same area of support, and then it goes higher, trades sideways, back down to that same area for the third time, and this time it comes in with high volume. And on Friday, the volume was 2.1 1.14 million shares. The average volume, what they normally have traded buying and selling, is 610,049. Now, that's quite a bit more volume that we had on Friday. I'm going to tell you why that's significant. Because of this multiple bottom formation. Because you can see right here at the beginning of January, it came down to that area of support, the first bottom. First thing it did is it traded higher, gapped up off of that support level on high volume. That lets me know the institutions are interested. Then you look and see in February, it trades off of that bottom, goes up, hits resistance, force the price back down. Guess where? To that same bottom area again. And look at how many times this stock has traded down to that bottom area, and look how many times it has popped off of that bottom area and decided to go higher. This is the third time that the volume is much higher than normal. So Wrap Technologies is coming in at only $5.85 per share. I'm all in favor of law enforcement. Gotta support our police, man, because if we don't support them, who you gonna call when somebody got one of them up to your head trying to take your Nikes, trying to take your wallet, trying to drive off in your car, make you walk home? Gotta call somebody, man. So check out Wrap Technologies. If you feel like rolling the dice, Wrap Technologies. But I gotta be honest, sometimes when you roll the dice, like I say, I gotta keep reiterating this. Sometimes when you take a gamble on a high fly potential gain on a stock, sometimes you come up snake eyes. Don't nobody want it, but it happens. But sometimes you roll double sixes and this thing flies like a rocket into space. And at only $5.85 per share, when this thing takes off and it breaks this level of $6 and $6.85, when it closes above $6.85, this thing gonna fly. So I'm trying to tell you now, give you a chance to get your nerve together and see if you are the type of trader that feels like rolling the dice. Now the third one goes by the name of Vinco Ventures Incorporated, ticker symbol BBIG. Now I'm gonna go back to Yahoo Finance and read you a little bit about the company profile, give you guys an idea of what Vinco Ventures Incorporated is all about. Vinco Ventures Incorporated operates as a consumer product research and development, manufacturing, sales, and fulfillment company in North America, the Asian Pacific, and in Europe. The company offers toys, plush, homewares, and electronics to retailers, distributors, and manufacturers through e-commerce channels. Everything is about the internet and the Internet of Things. Technology is taking over, and right now technology is taking a hit because a lot of the high-flying stocks like this, that their earnings have not really caught up to their valuation as a company, a lot of them have been punished in the past few months with the market selling off. So right now, I'll be honest with you, I gotta tell you the truth, always comes straight from the shoulder like a jab. Right now, Vinco Ventures Incorporated is trading at $2.66 a share. A little bit on the risky side, but come on now, $2.66 a share. I got $2.66. I ain't rich, I ain't poor, but I got $2.66. So let us go to the chart. BBIG coming in at $2.60 a share. First thing that I do like is the fact that on Friday the volume was 9,691,000 shares bought and or sold. the average volume is only 3.3 million. So we are sitting at triple. I'll say it again, triple the amount of volume in this stock that traded Friday compared to its norm. Now, what I do like is this. Right here near the middle of January, you see the stock price gapped up. It was trading at $1.60 and it gapped all the way up to $5.99. Even on that same day, it had a high of $9.40. But as you can see by this big red candle, when that price hit $9.40, the short sellers immediately shorted the stock, which means they put money on the top of the stock. Those are the real gamblers right here, the short sellers. Those are the ones that let the dice just fall. They don't mind gambling. Maybe that's why they make more money. But anyway, the short sellers came in when that stock price reached $9.40 and they forced the price lower. And since then, the price has been basically trading lower by the month. But I'm looking at this volume, 3 times the average, coming off of 2 consecutive positive green days. Now, I'm going to tell you how to play this thing. I'm going to give you a playbook for this. Right now, the price is at $2.66. Now, looking at this chart, once again, this is all about technical analysis. Now, if you the type of investor that don't mind going for the bomb on first down, if you the type of investor that don't mind taking the 3 instead of taking a 15-footer, if you are the type of investor that do not mind, that you just don't mind rolling the dice, whether it comes up double sixes or whether it comes up snake eyes, if you don't mind dropping all them dice and swinging for the fence, check out BBIG, Vinco Ventures Incorporated. Now, the way to trade this is, once this stock price closes, listen to me closely, once this stock price closes above $3, especially if it closes above $3 and is on a green day, in other words, the candlestick is green. If it closes above $3 and gets near that $4 range and is trading on higher than average volume, check it out, BBIG, because this is going to take off like a rocket. Now, the reason that I believe that is because right here on FinViz, my favorite website to look at stock charts, by the way, they have a section right here that says short float. If you look on FinViz under ticker symbol BBIG, Vinco Ventures Incorporated, the short float, which means people that are trying to force the price down, the short float is high. It's at over 27%. That's high. So what this tells me is when this stock starts to catch bids and the price starts to go high, short squeeze is more than likely gonna happen. Now, for those that don't know what a short squeeze is, I'll just direct your attention to the stock known as GameStop, ticker symbol GME. Y'all remember that, right? When they had GameStop stock all on television, people calling my house, asking me what's going on about GameStop. Man, what's going on with that? You and GameStop? All that don't matter. But the reason that did happen is because of a high short interest. Because when people who are shorting a stock, when they're wrong, which means the stock price is going up instead of what the shorts want for it to go down, when they're wrong, they lose money hand over fist. And in order for them to close out those losing positions, they have to actually buy shares of the stock to close a position. So think about it. What you think gonna happen when a lot of people are buying a lot of shares of stock? They buying to close a position to stop losing money. You're buying to open a position to start making money. So on both ends, you got a lot of buying that's going on. So when these shorts, the people who are shorting this stock, when they are wrong, which I think that they will be in the next few months, I think this is going to break out and go towards $4, and it's going to try to get back up near the $8 or $9 range. So if I was you, I would roll a dice on this company. BBIG ticker symbol stands for Vinco Ventures Incorporated. I'm the one known as the stock dude. Thank y'all for taking the time, and holler at your boy later.